Hello and welcome to another update on TLT. So we want to talk a little bit about the trend here currently, because what we have is tricky structure, because we have 3 waves up into the July high from the May low, and then now a 3-wave pullback. Remember, we had in the last video update we talked about here, we have a 3-wave pullback and a dip into support. So if we now see, let's say, a reaction, potentially even in 5 waves, to this area, then this could mark the beginning of the next leg to the upside, potentially, in maybe a diagonal structure or so. It's a bit tricky. I mean, I can tell you that I'd say based on the structure and based on that everything is so super corrective, I think if we go higher from here, first of all, while this count is possible, I think we first would need to consider that even this B wave that potentially topped there on the 30th of June is extending. I'm going to highlight that potential in blue B. And this would mean we're just ranging a little longer. And it could mean A wave, B wave, C wave. This is the first scenario if we go higher from here, which is a big if, yeah. Because while the market reacted to support, I mean, that rally isn't clearly impulsive. I have to say, it does look a little bit maybe like a 5-wave move. Maybe a little bit, but actually I think it counts best as 3 waves here to the upside. So I can call that still a potential wave 2. Basically what happened, we moved from support into resistance. Why do I say into resistance? Because if I now measure the retracements, the price has reached the area between the 50% retracement and the 61.8 retracement, the perfect spot for this wave 2 to top and decline, start the next decline. Now I have to say, if we now continue the move to the upside, break above the 78.6 retrace level at $87.70, it becomes more probable that we are pushing higher, potentially in a more extended B wave first. Yeah. And yeah, in that case, I have to say this is a 1-2 setup. And the chance is that in this scenario, we're pushing a little higher, potentially to the 100% Fibonacci extension. This would be my first target to the upside, $90, yeah, 90. But that would require, first of all, now a break above $86.80. That would already, I think, make that more probable. And then a break above $87.74. We had a support zone here around the 16th of July. I'm going to remove that now because I want to make room here for the next Fibonacci support level. So again, this is a 1-2 setup. I would treat it low probability, but it is one. And the support here for this 1-2 setup is between $84.75 and $85.78. I really struggle here to clearly prefer one of the scenarios. I mean, I have preferred higher prices before, and it kind of worked out until it got very messy, and I said to you, be careful now. And I still think this has a chance, this push higher, right? Especially because the last dip here was corrective in nature. So I think blue scenario is what I slightly prefer, with support between 84.75 and 85.78. And this would be validated further with a break above $87.74. If, on the other hand, we're breaking below 84.75, then we could continue with the third wave to the downside. And that can eventually take us here below the May low and closer towards the mid $70 region. That should give you an idea of the potentials here right now. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Thanks so much. Bye-bye.